Okay, good afternoon everybody. Welcome to the first ChartWatch live webinar. I'm Carl Capolingua. As you probably already know, I say first because hopefully it's going to be a series of ones that we're going to do. I might switch over here to the studio apartment. None of it's real, of course, as you can see. We've got the really important virtual poster there which says keep calm and follow the trend. Look, hopefully this will become a regular occurrence. Might be Wednesdays at lunchtime, you never know. But I'm about to head off on a European holiday. Lucky me, in a couple of weeks. So we thought we'd squeeze in a bit of a test to check the interest, and then we'll continue them after the fact. Today's presentation is going to be pretty straightforward. I'm going to talk throughout the presentation, not specifically, however, about my ChartWatch model. Many of you are avid readers, no doubt, of my evening wrap and other technical analysis content I publish on Market Index, so you've probably got the gist of it, and it'll just be interwoven into today's presentation. But the actual stuff I'm going to talk about initially, we'll just do a bit of a whip around the grounds, a macro look at markets, and then we'll take your requests, and the goal there is to apply my technical analysis model using real case studies on ASX stocks you're interested in. So basically you'll type in BHP or Rio Tinto or something more interesting, and I'll pull up a chart and I'll do some technical analysis for you and show you how everything works in the process. Let's head over with that in mind to the AMI Broker screen. And this is, I only mentioned AMI Broker just so you know what the software package is. It's the one that you see every day in my analysis. It's the primary source of my charts. Why AMI Broker? It's just the one I've been using for a very long time, probably close to 2 decades now. And it does have a formula language which I can program my custom indicators into. So that's the benefit for me there. Plus it does all the other bits and bobs that I like to do. You can use the one that you prefer, of course. So let's start off with the Nasdaq Composite, and it is where we tend to start off in our evening wrap, don't we, with our technical analysis. And the reason why I start with the Nasdaq is because for me it's the key risk on gauge of US stocks. So yeah, we want to check what's going on in US indices. Let's face it, when the US sneezes, the rest of the world gets the cold. So we do want to start there. And if we're going to go to the US, we might as well check out the highest risk index. So you not only does it have, of course, your big ultra global growth sensitive technology stocks, but there's about 5,000 stocks in this index compared to the S&P 500. Obviously, the Dow Jones 30 completely useless to me because it's 30 big stocks. But there's obviously with that number a substantial number of smaller stocks as well. So basically here we kick off as we do, and I won't do too much background today because I'm going to assume a lot of knowledge just from the fact that many of you probably already follow my content, and I'm very detailed in that content and how most of this stuff works. But we're looking for trends first. So trend ribbons are a great way to very quickly ascertain what the trend is without having to do many measurements, and my model obviously there with the bright colouring helps us very easy to see double greens, double pinks, or mixed bags of thus, and therefore being able to make a quick decision on where we're headed, or likely headed. So double greens, that's usually a pretty good sign that we've got excess demand in the short term and the long term, and that's really what we're trying to find here is who's in control of the market, the demand side or the supply side. If the demand side is in control, we're obviously going to be far more bold with our portfolio management and stock selection, and if we don't have control, we'd rather be out of the market. If the supply side is in control, we'd prefer to be looking for shorts. So my model, and I've touched upon this a few times in the ChartWatch in the evening wrap, is I tend to sort of move in and out of the market on a portfolio basis in thirds, starting with the full risk position, which is where we are now. So double greens, price action is the next point. So rising peaks, rising troughs is more demand side oriented. Obviously, rising, the only way you can get rising troughs when you think about it. So obviously the troughs are the V-shaped points on the chart. So for example, I label them all 18,599, 18,847, etc. Rising troughs is, building demand. If we've got rising peaks, we're removing supply. So that's another demand side control indicator. And then the final aspect, as you all know, are my very, very favourite things, technical analysis things of all time, which is Japanese candlesticks. And we want to see predominance of demand side candles, and they're the ones with the white bodies and the downward pointing shadows. And once we have those three key tent pegs of my model, it should be pretty easy to look at a chart and decide whether we're more long side biased, neutral or zero risk position biased or short side biased. And here on the Nasdaq with double greens, we're still rising peaks and rising troughs, and a predominance of white demand side candles. I would say we're happy to stay the course. That famous phrase as well. And all that means is, for me, I'm happy to be full risk position, and over the top of any individual trades that I'm looking to make, there is this portfolio management model that dictates how much I can allocate of my total capital at any one point in time. If I'm trading in the US, well, this would be the key market that determines that allocation, and we're going to look at the ASX 200 in a second. So full risk position here. Am I worried about last night's candle? Yeah, a little bit, because it's not so much the candle itself. We often talk about the magnitude of a candle in terms of its size, how black it is, where it's closed on the day, upward pointing shadows, but it's also the importance of where it's occurring as well. The fact that last night's candle formed a second peak, I won't label it because it's pretty cluttered there, but that is a second peak, because you can see we've got a rising candle here, and then a falling candle the next one, and then a second peak and a lower peak to that. So we are seeing some supply starting to manifest itself here in the market from our candles, and it's at a level which we would associate up here, of course, with there being a substantial amount of supply there. So it's all kind of making sense that we're potentially moving from this very much demand side oriented market, potentially with supply increasing. So you've got lots of demand, a bit of an influx in supply, maybe moving into equilibrium. And that'll be my commentary tonight in the evening wrap. I want to keep moving, lots to cover today. But full risk position on the Nasdaq. If we were to see, for example, I might just go back for 1 second, if we were to see it close beneath a short-term uptrend ribbon, you'll see me type in the evening wrap, look, I think we want to just back away a little bit of risk, probably moving, say, to a 2/3 risk model. And that means you would start to be more vigilant. You'd be take a very strong stance on stocks that are starting to turn trends individually. So you've got your overarching umbrella of your portfolio management model, and then you've got your the model working on your individual stocks. So you'd be more aggressive at taking stocks out if they're starting to change trend, or you might be starting to lock in profits, etc., moving to that next lower down risk management model. On the ASX 200, it's all pretty orderly here. Yes, we've got a cluster of black candles coming in at the ends, but they're pretty tiny, aren't they? I mean, a small supply side candles means a small amount of supply coming in to, I guess, start to equate. There's that word, equate, equilibrium against what otherwise has been to this point a very strong amount of demand side control. Double greens, obviously, rising peaks, rising troughs, and a far greater predominance of demand side candles here, I think, than the Nasdaq Composite. So for one of those few times that the Aussie market looking better than the US market, and I'll put to you a rhetorical question, answer it in your head. Is this a picture that deserves us taking risk off the table at this stage? And there's plenty of bad stuff going on. When we get to the macro stuff, we'll probably see some of its impacts, and lots of narratives at the moment telling us to get out. But yet, in terms of the money that is moving prices, it's pretty limited downside at this stage. Even on that Nasdaq, even though I was maybe a little bit more concerned than here, it's still pretty limited. Okay, so full risk position on the comp, that would be my go, and full risk position on the ASX 200. Of course, it's important to remind you all the time throughout today's presentation that you decide what you do. And you are responsible for that. So keep in mind, disclaimer, that this is all general information. What I like to do after that is have what I call the whip around the grounds. So I've made my decision, but is there something that I can't see in these charts that maybe might cause me to be a little bit more cautious? Is there something building from left field that maybe isn't reflected here, but I might see it in that specific chart that I should be worried about? And for that, I like to go to the Russell 2000 next, and that's because if the Nasdaq, again, is that big risk on gauge in the US, the Russell 2000 is probably, dare I say, a better way to go, because not only do you have a wide range of stocks, and it's obviously 2,000 stocks, but it's more of an equally weighted index. It's still capital market cap weighted, but the top 10 have a far smaller impact on the performance of the Russell 2000 than, say, the Nasdaq Composite, where there's a major impact from the top 10 stocks. So we tend to get a better idea of what's really going on in the US market here. And I'm not going to do any more analysis here, except to ask the question, is there something here that is worrying me? Is there something here that will push me off my initial determination of portfolio management? And we can see here that the Russell 2000 is weaker than the Nasdaq in terms of, well, the Nasdaq's double green. The Russell 2000 is short-term uptrend, long-term neutral trend. Yes, it's got above that very important long-term trend ribbon there, but we've had a sharper pullback in the candles and far more prominent lower peak. So that is disturbing. That is disturbing. If you look at the real underlying health of the US market, it is not as good as evidenced on the Nasdaq. But is it enough to push me off my bias? I don't think it is, but it's certainly something I'll keep a close eye on. You'll notice here that my viewing of the Dow Jones and the S&P 500 will be conspicuous by their absence because they are completely irrelevant to me. They have no meaning at all. There's no point looking at those markets. They are not telling you what's really going on in US stocks. Then I like to go to Europe. Not that it really matters, to be honest, but again, we're just looking for something that might be coming out of left field. And we can see here on the French market, that's the CAC 40, some weakening. It's not as good as what we're seeing in the all-conquering comp. The DAX coming off some highs there. And what I typically want to see is this commensurate growth, this commensurate demand side control across all markets, because that will deliver us the lowest volatility and the best trends. So clearly what we're seeing developing now in the Middle East is starting to have an impact here, but we are now starting to realize that it is less, it's being less felt in Australia on the Aussie market, which is kind of a good thing. In Asia, any red flags there? I don't think so. Hang Seng pretty strong. Actually, the Nikkei looks pretty good. We're not seeing any live candles here. Obviously, these are based upon the previous session's close, because as many of you will know, I don't look at live candles because they're live. I need to see an end of day close. Anything that's live is discounted by me. For those of you who love to trade Aussie stocks, we'll have a quick look through the sectors here. Again, this is more just to see, well, which sectors are the funds favouring right now. Sector rotation in Australia is probably more prominent than anywhere else in the world because we're such a tiny market, and we do see the funds play favourites very often. Discretionary, yes, double greens, that should be very apparent, but we can see the price action starting to flatten out there, but at least we're in an uptrend. Energy's got to be the most important, the most interesting index at the moment. Obviously what's going on in the Middle East is potentially causing trend change here, and many of you will know my model requires it doesn't actually, the trough doesn't have to be all the way back to the long-term uptrend ribbon, but often they are, but it just requires any signal that this long-term trend ribbon is now acting as an area of dynamic demand for me to call the changing of that trend from long-term downtrend to long-term uptrend. If we zoom out a little bit, we'll see why I have this methodology. Because that long-term trend ribbon, which we have to understand doesn't exist in space and time. It is just a construct really of my analysis. And if it is predictive of any price action, it is a pure coincidence. And you really have to be quite modest and understand your place in the world of technical analysis. Your indicators don't cause things to happen. It's pure coincidence when it does, and it's nice when it does, but it's pure coincidence. But if there are so many pure coincidences, you kind of have to then start to feel that maybe there's something in it. So if we had taken this view that you really need to see a trough form above that long-term trend ribbon to indicate a new long-term uptrend, well, there wasn't one there, and there weren't any there. So we can see something significant is happening here, and therefore we can certainly pay attention to that. Heading over to the financials, that's fine, a little bit of a pullback. I'm not too worried about it. Gold, I think there's definitely some signs of supply creeping in here. I would reference that candle there, that drive there, certainly that one there. If you remember, I called it a species-eating event. I wasn't right on that one, but it certainly did delay gold's progress substantially, and I would argue that events around the world have helped gold to recover from that. But seeing a bit of supply creeping in there, a little bit concerned, let's say. Healthcare is a non-event. Technology, actually, well, there you go. We can see very clearly how the model works with this visual cue here. Very, very strong. Resources having trouble at my long-term trend ribbon again, and heading over there to property. Actually looks pretty good there with technology. Staples is looking okay, but you can see definitely some equilibrium going on, more supply coming in to meet the demand that was there. Telecommunication services, which is really the Telstra index, is very strong, and utilities is probably on the right side of looking okay. Apart from that, I generally like to then head over to the base metals because they're great indicators of the market's view of global growth. Obviously, we prefer to see these going up all at the same time, as it's telling us that investors are expecting stronger growth ahead, and that's good for stock prices. Aluminium trying to break its downtrend, isn't it? Obviously, the big wobble there, it was looking very good before our reciprocal tariffs were implemented, but it has recovered pretty well. Copper looking okay, not unhappy with that at all. Nickel just can't shake its long-term downtrend. Again, we're starting to see how these long-term trend ribbons work. Again, they're on lead and hovering in the middle there on tin and zinc. What's the conclusion? Is there something there to push me off my view that we can be full risk position at this stage? And no, I don't think there is. I think they're somewhat supportive on the important ones. I'll miss some of those and quickly head over to a different place here. We're going to go to over to the TradingView screen now. And the reason why I do that is some things are better done on Amy Broker and some things are better done here in TradingView, but we've got essentially the same setup. And again, you're seeing where you're getting your charts from in my evening wrap updates. We'll kick off with silver. This is my favorite chart right now, hands down. We did talk about last week, I think it was in evening wrap, how we did see this strong motive phase through here. We knew we were going to get some supply at 36.12. It was perhaps a little bit delayed. I think the fervour and the hype and the speculation in silver probably pushed it a little bit further, but we did get that pullback. And importantly, the old supply zone is now acting as a demand zone. We can see that with that long downward pointing shadow. You're probably all very bored with reading me type out as I type out downward pointing shadow. Do you know how many times I type downward pointing shadow in a day, ladies and gentlemen? But you can see just how descriptive those shadows are of where demand is lurking. Latent demand is lurking in the system down here to come in and absorb that supply. And it's speculative supply. It's from people who bought at the top. They came late to the trend. They bought at the top. Some of the big funds probably thought, this is a bit hot. We're going to feed the market a little bit to stop this trend, see what supply we can wash out. And then they all got collected down here and up we go again. And that candle is the important one. Obviously, that's last night's candle. This last candle is live. We completely discounted. And I think that's a nice continuation. If we look at some of the other sort of precious metals here, we're seeing coincident moves there in platinum. Palladium, I think it's starting to get going. Not that there's any palladium stocks that I know of on the ASX. Maybe you know some, I don't. And gold looks fine, but just looking a bit more equilibrium, like equilibrium rather than just unequivocal demand side control at this stage. But there's nothing there I'm too worried about at this stage. If we head over to high grade copper, that's flat, isn't it? I don't think there's much to see here. And again, sort of using this idea of, the trends very quickly tell you where you want to be interested. We can move on from some of these charts very quickly. Iron ore, I haven't updated a few of these since my last update in the evening wrap, but that looks like it's increasingly moving into a supply controlled market there with short and long-term downtrends now and moving towards some key points of demand. Uranium pulled back a little bit last night. I know sometimes when we only have a closing price, it can be hard to see, but that's what that looks like. But otherwise, we've talked about the importance again of uranium printing that higher trough above its respective long-term trend ribbon, and that will then start the new bull market as far as I'm concerned. In uranium, all know if you've been reading the wrap long enough, I called the bull market in uranium over in the wrap, or I probably called it before that, but certainly somewhere around here, it was very evident. And then I called a new bear market, literally, I reckon on that day, 23rd of July. Go back and check the tapes, as they say. I said the new bear market in uranium has begun. How about that? And not because I knew what was going to happen. I don't know what's going to happen, ladies and gentlemen. I wouldn't have a bloody clue because I can't tell the future. Just that my indicators, my model, which is based upon plenty of history and stuff tending to happen more often than not, would therefore expect that to be the case. And here we go. We get a nice trough above here, and we're back in the other way. I'll finish this off, I think, with Brent Crude, which is actually pushing into some of those higher areas, but still a bit of work to do to break its broader trading ranges. Coal prices are flat and stagnant and not doing a whole lot. In fact, coming back down there on coking coal. So that's what I call, ladies and gentlemen, the whip around the grounds. Hopefully it was worth your time. I don't know if we can do thumbs up or emoji reactions here, but if you can find a way, then let me know if you enjoyed it. Thumbs up if you did. Thumbs down. Well, there we go. We got one thumb. We can. Good. Okay. So I think that sets the scene. I like to start there because it sets the scene for the everything else we're going to do, which is looking at individual stocks. And I'm going to head over to you now and check your chat messages, because apologies, I haven't looked at them yet. And it's a little bit of a first in, best dressed. We'll go for about 45 minutes today, maybe longer if we're cooking with gas. And there you go, they're all coming in good. And we'll get to as many as we can, but I can't promise we'll get to all of them. Kirsty saying, congrats, Carl, happy holidays. Yes, I'm very much looking forward to it. Heading to Italy, Switzerland, and then France. From June 28 for about a month. Please review CSL, says Michael. Yep, let's do that. Well, that's a good place to start. Before we do that, a different Michael's got, your charts are on daily data. Have you considered weekly charts to reduce daily noise? Michael, you can, but for me, this is a good question. Let's address it. And look, ask questions about stocks, certainly, but also ask questions about trading in general or technical analysis. That's what I'm here for. I don't know everything about everything, but I might be able to give you some insights that will help change the way you do things. Let's go back here. And what I say is choose a periodicity that suits your trading style. And I've only got 3 up here because they're the main 3 I use. But actually, we'll go back here. I know I'm jumping around, but it won't matter for you lot too much. In TradingView, look at all the periodicities we have, and there's some that go under my head. So we can go tick. We can look at every tick on the market. Whoever's coughing, can you put yourself on mute, please, or stop coughing? We can see seconds, 5 seconds, 10 seconds. What I'll do is it'll literally take 10 seconds of ticks and turn them into a candle. 1 minute, 2 minutes, 5 minutes, and so on and so forth. And I say pick the periodicity that suits your trading style. So if you feel that you're a short-term trader, well, obviously you're going to gravitate more towards those lower periodicities. You might be on a 1 minute chart or a 5 minute chart or whatever it might be. If you're a longer-term trader like me, I use daily charts and only daily charts. They're the only ones I look at, except when I'm looking back to check historical points of demand and supply. We're going to do that in a second, don't worry. Some people prefer weekly charts because they only want to check the market each week. And this is the point of which one you choose. You should choose the one that you can be consistent with. So if you can check the market every 10 seconds, holy dooly for you. You get to use a 10-second chart. But you need to check the market every 10 seconds whilst that market is open. So if you're trading an FX pair, for example, foreign exchange pair, that's open 24/7, you'll never leave your computer, and that is not a life I would wish on anybody. If you're trading stocks, you've got to be there for 6 hours, every 10 seconds, checking the market, looking for your signals, checking your trends, checking your price action, tracking your candles. You can't do that in 10 seconds. I'd say that's pretty impractical. And how many stocks are you going to check in those 10 seconds? Kind of impossible. I'm just giving you an idea. When you get to a daily chart, hey, you've got now plenty of time. You might have a few hours in your evening because, again, we need complete candles, don't we? We need candles that are closed. So that implies you need to do it after the market's closed in the evening or before the market's open the next morning. But you've probably got more time, therefore, to check all the stocks now if you wanted to, if you've got a scanner like I do, use on Amy Broker, or even if you've got a long watch list. Now you can do it. So some people, and obviously if you're on a daily chart, you're going to get more signals than if you're on a weekly chart. If you're on a 5 minute chart, you're going to get more signals than you are on a daily chart. Some people want signals, they want to trade. If you've got an edge, that's fine. If you've got an edge, that is, you tend to make more money, make money more often than not, and your winners are bigger than your losers. You want to apply that edge as often as possible. So that's the other factor. You do want to find a periodicity that's active enough for you, as long as you can apply it consistently. Some people only want to check the market each week. They don't want really quick signals, and that's when I would suggest for the Michael that asked this question that you go to a weekly chart, and that way. What is your responsibility now? You're checking the market on a Saturday morning or a Friday night. If you're like me, you don't have much to do on a Friday night or a Saturday night, so maybe that's when you're doing it, and now you've got all the time in the world, and you set up all your actions, and it might be a series of buys or a series of sells or a series of trailing stops. They're done when the market is closed. And the beauty of this, ladies and gentlemen, is by going to either daily or weekly, these end of session periodicities, is that it will dramatically reduce your emotions when you're trading and the silly things that you might do because the market's closed. Okay, you might have just seen a stock crash, and instead of wanting to hold on to it for it to bounce in that cold light of day or night, or whenever you're doing the analysis when the market's closed, you'll start to realise that this is the right thing to do. You don't have that pressure of that ticker, that moving price, causing you to do the wrong thing. You'll set up your trades and off you go. The best thing for me in my trading over the last 30 years, in fact more than that I've been doing it, is starting to do things when the market's closed, because it takes a lot of the stupid stuff I want to do in that moment out of the equation. Hopefully that answers your question there, Michael. I will look, I'll just try and pick out some of these big questions. How to build a TradingView chart, or we're not going to go into that. That would be more of a Google thing for Karoon. Google how to do TradingView charts. But I can say, if you want my trading ribbon, there is a way to get it, and I can't remember the email off the top of my head, but I will put it in the YouTube blurb. Okay, so when I upload this to YouTube, you'll get an email saying, hey, it's uploaded to YouTube, and in that YouTube there'll be a blurb on how you can get my TradingView trend ribbons. So that is something I'm happy to share with everybody. Hi Carl, can you show stock case study, how we do the 1/3, 2/3? Look, I better go up to the top and work my way down, otherwise I will completely get lost. So let's go back here. And we're going to do our first stock of the day a little bit later than I would have thought. And we're going to do CSL. This one's for Mike. And we'll kick off over here and over here, and we're going to go all here. And don't worry about some of these technical things I do. At the end of the day, it's the analysis that matters. Now, Mike, I put to you, what are the short and long-term trends? We should be able to ascertain them that quick. Do we have demand-side control? Do we have supply-side control? And so what? I think we've got short-term supply-side control. I think we've got long-term supply-side control. That tells me that look at the predominance of black candles. We've got lower peaks, lower troughs. That tells me that there are fund managers out there that are literally sitting on the sell button on CSL. They have programmed orders that every time CSL ticks up a bit, and if you own CSL, you probably notice this. Oh, CSL is looking pretty good this morning. And you tune in by the evening and it's down again. You've got another black candle or another upward pointing shadow, because those programmed orders are designed to sell into strength, even if that strength lasts for a few days, because for whatever reason the broader market's rallying, right? So CSL goes up for a few days, for temporarily overwhelming that programmed pervasive selling. But eventually the peak is formed and we get a lower peak, and so on and so forth. Now, I don't know the fundamentals of CSL. I should say it's very important for you to understand. It's not that I don't know the fundamentals. I just don't care about them. I really couldn't care any less about them. And if you want to tell me about them, I've got Tetris on my phone. So you can start talking, but don't mind if I start playing Tetris. All that matters to me is price and price action, and what demand and supply is doing. Because ultimately, the people who are making these decisions know way more than I could ever know about the company. So I kind of sit in there, well, if they know more than me, why would I bother trying to know more than them basket? And I get to piggyback them anyway. So no, for me, look, for me, this is not a company, and this is sort of the phraseology I'll use. This is not one I'd have any risk on. So for me, I'd be what I call zero risk position on this, or ZRP. Is the terminology you might see me write on the screen from time to time, for example, thus, right? So for me, I'm a ZRP. Let's make it capitals. I like capitals. That's me. I'm ZRP, zero risk position. I'm ambivalent to this. Actually, that's not true, because if you follow my ChartWatch scans, you would have seen that from about, well, I want to say, and I'd have to go back and check, but I'm going to go maybe even here, certainly here. I wouldn't have liked that shadow on that day, but certainly this cluster here, and I think some of you who follow ChartWatch scans know where I'm going, you would have seen me run this as one of my featured downtrend charts, and you know that they're the ones I'm thinking about shorting. Okay, so yeah, look, this would still be more likely to be short at camp than long it, and I know that's blasphemy for many people because people will tell me what a great company CSL is, but I don't care. It's really important you understand that. So I don't think I need to do any more analysis on this, Michael, because I'm really not that interested in it, to be honest, and I'm going to keep moving. And if that upsets some people, this is probably not the right forum for you. So, Carl, look, I need you to tell me about the CSL's business model and its incredible moat. I mean, it's got such a great moat. It's just not my gig, okay? So, but there are plenty of talking heads on the internet right now that will cater for you, and they'll tell you all about CSL's moat. NextDC is looking half decent. I mean, straight away on the stuff that matters to me, I can see a short-term uptrend. So that's important. We can see there is demand coming in potentially to change that long-term trend, which has actually transitioned to neutral. How do I know? Well, I'm not making this stuff up. I've got this great trend ribbon here, which just tells me it's neutral. Why has it changed? I don't care. It just has. That's all I need to know. And the important thing is that at the moment, that long-term trend ribbon is still acting as an area of dynamic supply, isn't it? So that is still causing problems. I say, look, muck around with that trend ribbon at your own peril. Okay, really, because when we break beneath the trend ribbon and we form that all-important trough beneath the trend ribbon, that's my indicator for trend change or change to a bear market for the particular stock. It's not good. More often than not, it's not good. Hey, sometimes it does that and it goes straight back up. Okay, sometimes it does. But I think if you've been using my model for long enough, more often than not, it does that. And that's all I care about. So we're starting to look okay here. But I don't think I'm adding risk yet. I'm not far away. What would start to help me to want to add risk to this thing? Well, I've told you. Some price action that looks like that. I'm stylizing this. Of course, those lines need to become candles, don't they? Preferably demand-side candles, so white candles, downward pointing shadows. We want to see, what's the pointy bit? A peak. And then a little bit of a pullback. I'll call it a dink. You'll hear me. This is a very technical term. This is the most technical term I'm going to use today, ladies and gentlemen. It's called a dink. And the dink just means a supply-side response. You've often heard me talk about this in Evening Wrap, that a peak or a pullback is not a bad thing. It's a wonderful thing for us technical analysts because we get to see the supply-side's response, their power, their motivation, and at the same time, then we get to see how the demand-side responds to that. So if we have just a very shallow pullback, we've got very, very limited supply-side response, and then a strong rally. We really are reinforcing what we already know here, which is an improving, supply-demand picture. So that is something that I'd be watching for. For now, though, this is something new you're going to hear or see me type on screen. I'd go FRP on this, and the FRP stands for full risk position. So I'd be happy to hold what I've got. I'm not going to add any at this stage. So if I had it. I don't have it. I wouldn't have it because it's not doing what I need to. But if you've got it, for example, and again, you do what you do. I'm going to do what I'm going to do. But if I had it, I'd be more comfortable. I'd be comfortable with holding what I've got on the basis that everything's starting to improve. So wouldn't see a need, for example, like on CSL to reduce risk at this stage. And you're starting to get some of my phraseology, some of my terminology, which is I just see the market in terms of risk. That's all it is. That's all. They're just pixels for me. This is all just pixels. But behind the pixels is how much risk I apply, right? The pixels here, they tell me whether I want to add risk, reduce risk, or maintain risk. And that's all the market means to me. Okay, let's, Michael, I'm only going to do those, Woodside, such a favourite. Let's do Woodside. I was going to say I'll only do two of yours, but there's probably a few people that want to know about Woodside. Don't worry if it doesn't come up first up. I've got a system here where Amy Broker has old stocks with ticker codes. I've got all the companies on the ASX that ever existed. Isn't that nice? Now, Woodside's starting to turn the corner, isn't it? So this is a really interesting chart. We can see once again why you don't want to muck around with the long-term trend ribbon. I know I'm being very repetitious, but we are hopefully starting to see, right, that it's not a fluke. The trend ribbon is not a fluke. And now what are we doing, ladies and gentlemen? You know the technical term. What is this? We are dinking. Okay, we are dinking right now. And that's good. We're starting to see this supply side response to Woodside's tremendous rally. And if we see a really sort of shallow pullback, then that's going to be quite good, I think. I think. I don't know. I can't tell the future. But more often than not, my model would suggest that if we can form a trough above that long-term trend, we are changing the long-term trend. So again, for me, again, you can do whatever you want to do, but I'm an FRP here, I think, based upon what I can see. I don't think there's any reason to reduce risk on Woodside. I don't think there's any reason to add risk on Woodside because I haven't seen the signals I want to see yet, but we are seeing substantial improvement. Obviously, I should always go back to the basics of trend, so short-term uptrend, long-term trend is back to neutral, higher peaks and higher troughs clearly on screen, and I think a growing predominance of demand-side candles. And we're just looking again at those 3 tent pegs, and it actually makes it pretty easy, I think, for me to get through this list a bit faster and get to a few more people's questions. How do you build? I've done that one. Ribbons. The ribbons, yes, there's no secret here. That's the other important thing. I don't have any secrets. I've just got stuff to share. And Kirsty quite accurately saying that my ribbons are 21, 34, 144, 233. I've just done some programming to give them the colours and to make them change colours at certain times. And probably the hardest thing to do is to make them go through neutral, which is a little bit important. And I'm not going to tell you how I do that. I do have a secret. There you go. That's the one secret I have. I don't tell you how they change colour. But I did want to go here because I want to show you if we go here, I can go here. I've got technical analysis. There you go. This is a market index, of course. You all know what this is about. And I go to technical analysis. There, my ChartWatch ASX daily scans. And if I go into one of them, for example, today's uranium, so-called uranium special, that was yesterday. Go to the bottom. Where does that get me? There you go. That gets me to where I wanted to go, which is the technical analysis for beginners ChartWatch primer. So the basics of everything I do and quite a detailed explanation of how the model works. And no doubt somewhere in here, if I scroll down far enough, will be the trend ribbons and their denominations. I could go Control F, but I promise there you are. Just to prove to you, I have no secrets, only stuff to share. So we're going to head back to Amy Broken Down, trying to get to a few more of your questions. We've got Peter coming in with Megaport, which many of you will know has been in ChartWatch scans as a feature or feature uptrend, I should say, many times since around about. Might have been that day. I might have put it in early on that day, but certainly there and there. And again, I know when they went in because I know my model. Certainly they went in there, it went in there, it went in there. It would have gone in there. It's gone in on that day. 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 So yeah, look, it's and the reason for that, it's all doing the right thing. Interestingly, it went in as a short on that day, short on that day, short on that day, short on that day as well. Okay. Because that's the model, and that's the beauty of having a model. It forces you to be consistent. Let's get rid of all of those. But what about now? What's happening now? A little bit of equilibrium, isn't it, Peter? I don't think you're too worried by those candles. They're not 100% ideal. We'd love to see big white candles down and pointing shadows every day, wouldn't we? But it just doesn't happen. All stocks go through ebb and flow where some funds, I mean, right now there's clearly several funds that still think this is cheap, but clearly there's a fund or two out there that maybe is saying it's expensive for whatever reason, and they're increasing their supply into that demand and it's causing it to flatten out a little bit, and that's all it is. It's nothing sinister at this stage for me. And I'm just going to draw in some price action here. I'm just drawing in peaks and troughs, and we are seeing a little bit of a lower peak there, but nothing really untoward compared to what's going on in the broader market. Candles, I would argue, are still predominantly demand side. Obviously, we've still got this great trend here and here, and the trend ribbons are still acting as areas of dynamic demand. So for me, I'm a happy FRP here. That's what I would do. You can do whatever you want because I don't know the future. I don't know what's going to happen tomorrow. Tomorrow, we could see a giant black candle. They could come out with an earnings update. We're getting close to confession season now, aren't we? We're about to have in August the release of full year earnings, and around about now, companies start to say, look, we're probably not going to hit the market's estimates. That could happen tomorrow. I don't know because I can't tell the future. And it wouldn't be in the chart because it's news, and news implies it's new. and it's something the market hadn't considered. I'm just trying to get across the point that I don't know what's going to happen next. I can only make the best decision based upon what I can see. And what I can see is nothing really to panic about here. When would I start to panic? That's silly. It's a silly term, so I never panic. But I would start to reduce risk, isn't it? We don't panic anymore when we've got a model. We're either increasing risk, maintaining risk, or reducing risk. But I think if we're starting to close beneath that trough there, remember each trough, I sort of interchange these terms, trough and point of demand. It's a point of demand. It's a point where there was demand. And if there isn't demand there next time, I'm not so sure about that. Why wasn't there demand? You were demanding before. You'd loved it before. Now you don't love it? Well, why not? And again, I don't ask questions. I just change my risk level. So I might be looking to reduce risk in there somewhere. And again, the way I do it, I know we're covering a lot of ground today, but I do have a 1/3 model, so I like to go in thirds, and I like to go out in thirds. And I have touched upon this several times in many of my writings on market index, and maybe I'll do an article just on this. But for me, it's a really important way of doing things because I don't like to be all in and all out, because when I'm all in and all out, I feel like I need to be perfect, and the market is the greatest what's the right word, machine in the world at demonstrating you are not perfect. So the problem is, as human beings, because we love to feel like we're perfect, when we don't feel perfect, we start to get a little bit sad and emotional. And when we're sad and emotional or angry, and we don't make very good decisions when we're sad, emotional or angry. So I like this idea, you put some risk in, see how it goes. If it keeps going up, add some risk. If it doesn't, well, I only put a little bit in, that's okay. And getting out as well. I've got, get out a bit if I'm a bit concerned. And if it goes up, that's okay. I've still got some. But if it goes down, well, at least I've got out a bit. It'll be a game changer for you. I truly believe that. Peter, I'm only going to do your first one because I need to get to a few others, and I have no idea what time it is. We're getting pretty close to the end. Look, I'm going to go for about another 10 minutes. I'll do as many as I can. But the good news is, I think we're okay. We've got nearly 100 people here. That's a surprise. So let's call this a success, and we'll come back and we'll do some more when I get back from my holiday, and we'll get all your questions answered. Let's go to the next one then, which is from David. It's BPT. And the good news is, there's plenty of other stuff that I've got for you online that you can read in the meantime. Let's go Zoom normal. It's really important we reset our Zoom before we look at the next chart, so we can look at it in a consistent manner. There's that word again, consistency. It looks very interesting, isn't it? This is a stock that I've at times had in the downtrends list. Not often, because as you can see, it's pretty sideways. But I want to say probably around here. It would have been in the downtrends list. And I don't think I've done much with it. It's not springing to mind as something that's been in those lists very often. But it might get itself in there in the not too distant future. It's starting to improve. We are obviously seeing a semblance of an uptrend. And I'll put this to you. When you think about Beach Petroleum, and you think about how much Woodside's rallied, Santos has rallied, and the one that many of you will know I have put in several times, and I'm pretty sure I put it on that day. I might have put it in that day. I definitely put it on that day, and I 100% put it on that day as a feature uptrend is Karoon. So that's the one with the best trend as far as I'm concerned. But if we go back to BPT, you kind of have to ask yourself, well, why hasn't BPT gone up? The funds are all over the other ones, and yet BPT is kind of a laggard. I wonder, is that because BPT is the best stock in the sector or the worst stock in the sector? Now, regardless of what you think, I think the market's kind of telling you that. But, hey, it is improving, and if you've got it, you're stuck with it. Is that true? No, you're never stuck with it. Maybe you could go on one of the ones that are doing better. I don't know. Look, the short-term uptrend is maybe getting better, but even then, like in all of the positiveness we've had on energy stocks, it still managed to do that, probably for some bad news, because this one is notorious for bad news. If you own it for any length of time, you agree with that. Long-term trend actually still down. I don't know. Let's give it a score out of 10. What do you reckon? We've seen some really good charts. We've seen some not so good charts. Is it a 4 out of 10? Is it a 5 out of 10? And when you get to the end of your analysis, you've gone through, you watch this, using my model, using the system of giving them scores out of 10, you get to the end, you go, well, that was a 4 out of 10. And you're thinking about, well, what am I going to buy tomorrow? Are you going to buy the 4 out of 10s? I don't know. And if you've got money on this and you've got a bunch of 8 or 9 and 10 out of 10s on the list, you've got to say, well, am I better holding this as a 4 out of 10, or I better switch into maybe some of those other ones? It's always your decision, isn't it? Great thing about the market is it'll be open tomorrow, and it gives you the chance to make the right decision. You don't worry, there it is. Look, is this a 10 out of 10? Is it a 2 out of 10, or is it a 4 out of 10 or a 5 out of 10 again? And we're starting to understand, I guess, how we can very quickly ascertain the market's level of interest. Forget our level of interest, forget what we think, but understand what the market's level of interest in any particular stock by using the model. I think this is very sideways. If I had it, well, I see I wouldn't have it. That's just me. If I had it, is it worth sticking with? Look, it's not bloody awful, is it? But it's not bloody great either. Oh no! Look, I'm going to go just on the basis of opportunity cost, which is the key driving force in all of economics is opportunity cost, right? Because money doesn't like to sit around idle, doing nothing, earning nothing. It wants to earn a return, and it wants to earn the best return. Is this giving me the greatest chance of earning the best return? For me, the answer is no. For you, the answer might be something else. But again, I don't know where it's going to be. This could get taken over tomorrow. Maybe by Gina Reinhardt. Who knows? Maybe she's got a bid on the table at $1 a share. We don't know. I can't tell the future. And then you'd be cursing my name for telling you the day before that it's a ZRP. But I can't tell the future. All I can tell you is what I think right now is it's not that exciting. Let's do MQG. MQG. And if you don't like what I say, oh, look, I'm very sorry if it's your favourite stock, but I can only tell you what I see based upon my model. Macquarie's looking okay. I did put it in fairly recently. I want to say as a maybe not as a feature uptrend, but it certainly made the list, the broader list, a couple of times. Feature uptrend is just higher conviction for me. So I think it's okay. This is good. It's got itself above the long-term trend ribbon. That long-term trend ribbon, you can't see it's gone under the short-term one, but that is up also. It's probably a little bit of a victim of broader market events, but it's holding. Look, where would that thesis change for me? Where I'm starting to say, look, it's not okay. Well, I see a key point of demand here, and certainly that short-term trend ribbon. I'd like to see the stocks continue to trade above their short-term trend ribbon. Okay, and when they don't, it starts to make me nervous. I'm not saying we will wholesale get out if that occurs, but it starts to make me a bit nervous. So again, using this idea of, well, if I'm getting nervous, does that mean I want to hold all the risk, or do I want to have a bit less risk? Can I propose? This is a proposal. You're going to do whatever you want to do, of course, but maybe that's where you start, like a close beneath the short-term trend ribbon with a decisive supply-side candle, black candle, or upper shadow. Maybe that's where you go, I'll knock a third out there, see how I go, and then maybe there it's knock a third out. Okay, and if Macquarie, for example, knocks you out of a third and then does that, well, so what? That's okay. I mean, I made the decision that I thought was sound and justified at the time based upon the information I have, and it didn't turn out. Well, that's all trading, and that's all investing, isn't it, at the end of the day? But at least we've got a model and a methodology to help us understand when to do these things. That was brilliant, Carl. Great to see your methodology in motion. Thanks, Rebecca. Maybe Rebecca's had to go. How am I going? We've got 3 minutes left, and then I'll start to wrap us up. So what can we do in the meantime? Maybe we can do some Droneshield, and I'm going to go normal here. And there we go, Droneshield. This one's been in the watch list several times as feature chart. I want to say I put it on that day, 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 I put it on that day. Ooh, I reckon we would have taken some off the table there. Probably made us a bit nervous. It even closed beneath the short-term trend ribbon. But not enough potentially to kill the trade, probably retain some, and then we added some back in there, and there. And anyway, so that's the history of ChartWatch ASX scans. If you haven't been using ChartWatch ASX scans, this is probably indicating to some extent maybe you need to start looking at them. Let's get rid of all of those studies. Today's candle is not a great candle for Droneshield, but look at its size within the context of everything else. It is nothing I'm worried about here. So for me, this is definitely an FRP. I'm happy to have all the risk on Droneshield. When would that change? Well, I certainly wouldn't want to see it sort of get down there, but that's a long way. But we're probably going to get, if you go, oh, Carl, that's too far. I don't want to give back that much profit. That's like 50 cents, Carl. Okay, well, you're probably going to get some nasty candles in the meantime, right? That will give you some indications that the supply side is coming in to take control. So if I saw something like that, I might take some risk off the table. It'll have to be a big black candle. But today's not it. So happy holder there. That's for the people who have it. Well, what if you don't have it? Well, Carl, it kind of looks okay. I think it looks like demand side control. When can I get in? Well, we're having a little bit of a pullback today. Maybe it dinks a little. Maybe get a little bit of a dink. And on that next dink, if you're getting a nice candle in the dink zone, that's the official term, the dink zone right there, maybe that's where you put it in. So I have a terminology, I'll call it next. N stands for next. DS stands for demand side candle. You're all familiar with these terms if you read my analysis. Next demand side candle, for me, I can add a third. You can do whatever you want. But the next demand side candle, because I've got everything else. Why next demand side candle? Okay, well, I've got that. I've got the uptrends. I've got a predominant, like everything's there. So really, I can't do it on today. Hey, today's still an open candle. I shouldn't even look at today. But because of the supply side that's in today, but the next demand side candle, I'd be happy to go. If you're wondering what this thing here, that's called the relative strength comparative. That's a custom indicator of mine. Nobody has it in the world. It is something I built. It just references the stock versus the index within the trades, and generally want to see green bars and rising bars there because it's telling you the stock is outperforming the index within it trades. The last one today, I'm sorry for everybody else I didn't get to, but again, this is the start, not the end of this type of interaction that we can have, is Bluescope Steel. Now, this is one I think I put in not that long ago. I want to say on that day there, I reckon I probably took a bite at the cherry in that day there. And I don't think I've put it in any more recently than that. So they're the two signals. Now, if those two signals were the ones that you added some risk on, remember our terminology, then how would we be going on the trade? Well, we're probably not full risk position at this stage, I would say. And it's going to happen. Welcome to the party, everybody. It's going to happen that stuff doesn't turn out the way you thought it would. It'll happen whether you're using my model or whether you're not using my model. How about that? But for me, there's enough here, I think, to not have a full risk position. And look, I think that candle's the big one, isn't it? Look at that long upward pointing shadow. So Bluescope gapped up on that today, probably some news. And at one point, this was like a big white candle. It was a substantial white candle showing this huge amount of excess demand. And what did the funds who had Bluescope stock do with that excess demand? They smashed it. They sold into it, and by the end of the day, we end up with this candle. So that is your key indicator. And this shadow here, that actually creates a little point of supply, doesn't it? Oop, that's not what I want. Hold on, it'll appear in a sec. That's our point of supply. So once we've got that point of supply in place, we're really looking for confirmation of that point of supply to start to reduce risk, or for that supply to be taken out to therefore hold risk and maybe potentially add some. What was the confirmation that came? Well, that candle there kind of looks like a demand side candle, but again, it's still got that telltale upward pointing shadow. So on the rallies, are we getting buy the dip or are we getting sell the rally? That is a sell the rally candle. That's definitely sell the rally. And we're really transitioning now, aren't we, from what is being indicated by this and this into, and this is what the candles do, is they're far shorter term than any of those trend ribbons. Those trend ribbons, they're moving averages, they're delayed. Price action is happening now, and that's why I've got these different layers between peaks and troughs, which are a little bit more delayed, and then you've got the instantaneous feedback from your candles. So sort of around there, I'm starting to get a bit concerned, and I think this candle here, and certainly that candle there. I think after that candle, this candle here, it's very hard to argue for full risk position. I reckon, look, if it's 50-50 or 1/3, it's up to you. But look, I'm definitely not a full risk position. I'm closer to zero risk position because it's hardly warranted here. And I think certainly close beneath this point of demand will kill it, and certainly close beneath there would kill it. Anything down there, I'd be ZRP. That's just me. And again, I don't know the future. It could get down here and do that, and so be it. I'll happily get on with my life. I'll sleep well that night knowing that I did everything I was supposed to do based upon my model, and that's all I can ever hope to do. Ladies and gentlemen, I apologise for everybody who had, I'm sure they're great requests, and if we had 10 hours, we could probably get through them all, but we don't. And this was just a bit of a test to see how this all worked out today. And it looks like, I think, we've got something that we want to keep doing. This video will be uploaded to YouTube, and I'll send you an email to tell you it's there if you wanted to review any of the stuff in it. So look, thank you for watching, of course. When you get to the Market Index YouTube page, make sure you hit subscribe, obviously, to stay abreast of all of our future notifications and videos. There's going to be a lot more of them, I should expect. And of course, hit the thumbs up button on the video as well. Ladies and gentlemen, it has been actually, I should read, I read the official disclaimer. No, I read it at the start. Actually, I didn't read it for the recording. So just for everybody on the recording, please understand that the content of this presentation was general in nature, did not constitute a recommendation. It did not take into account your personal financial circumstances or objectives or needs. So before you act upon it, please consider it very carefully, determine whether it's appropriate for you, or seek appropriate advice to determine that for you. Ladies and gentlemen, let me say that it was an absolute pleasure chatting with you today. Hopefully you enjoyed it. Hopefully you got a lot out of it. And all the best for your trading and investing. Until we catch up again. Bye-bye for now.